Welcome back to BitcoinDorks. Today, we're diving into a controversial claim made by an executive about Bitcoin prices going down. This statement has sparked debate within the crypto community, so let's dive right into it. Recently, an executive made the bold assertion that the notion of Bitcoin prices going down is fundamentally flawed. This claim has raised eyebrows and sparked heated discussions among investors and analysts alike. But is there any truth to this assertion, or is it just wishful thinking? To understand this claim, we need to examine the nature of Bitcoin's price dynamics. Bitcoin, like any other asset, is subject to market forces such as supply and demand, investor sentiment, and macroeconomic trends. These factors can influence the price of Bitcoin in both the short and long term, leading to fluctuations and volatility. However, the executive in question argues that the concept of Bitcoin prices going down is flawed because it fails to consider Bitcoin's intrinsic value and its potential as a store of value. According to this perspective, Bitcoin's scarcity, decentralized nature, and utility as digital gold make it resistant to downward price pressure in the long run. The executive backs up this assertion by referencing historical price trends and data to bolster their claim. They point to instances in Bitcoin's history where the cryptocurrency has undergone significant price corrections, only to rebound swiftly and reach new all-time highs. This pattern of boom and bust cycles, as described by the executive, serves as evidence of Bitcoin's resilience and its remarkable ability to recover from price downturns. These historical examples provide valuable insights into Bitcoin's market behavior and dynamics. They showcase how Bitcoin has weathered various challenges and adversities over the years, including regulatory crackdowns, market crashes, and technological hurdles. Despite facing seemingly insurmountable obstacles, Bitcoin has consistently demonstrated its capacity to bounce back stronger and more resilient than ever. The executive argues that these boom and bust cycles are not signs of weakness but rather an inherent feature of Bitcoin's maturation process. Just as with any emerging asset class, Bitcoin experiences periods of rapid growth and speculation, followed by inevitable corrections as the market undergoes price discovery and adjusts to new realities. This natural ebb and flow is indicative of a healthy market, where price movements reflect genuine demand and supply dynamics rather than speculative froth. In essence, these fluctuations are essential for the market to establish a fair and accurate valuation of Bitcoin. During periods of rapid growth, speculative fervor may drive prices to unsustainable levels, leading to inflated valuations that are not supported by underlying fundamentals. Inevitably, these inflated prices will correct as market participants reassess the true value of Bitcoin and adjust their expectations accordingly. These corrections serve as a necessary corrective mechanism that helps weed out excess speculation and restore balance to the market. They provide an opportunity for investors to recalibrate their positions, reassess their investment thesis, and identify value opportunities in the midst of market turmoil. In this sense, corrections are not only inevitable but also beneficial for the long-term health and stability of the Bitcoin market. By emphasizing the cyclical nature of Bitcoin's price movements, the executive seeks to provide investors with a broader perspective on market dynamics and encourage them to adopt a long-term mindset. Instead of being swayed by short-term price fluctuations, the executive urges investors to focus on the underlying fundamentals of Bitcoin and its potential for sustained growth and adoption. This long-term perspective is crucial for navigating the volatile cryptocurrency market, where prices can fluctuate dramatically in response to various factors such as market sentiment, regulatory developments, and macroeconomic trends. By taking a step back and considering Bitcoin's fundamental value proposition, investors can better withstand the inevitable ups and downs of the market and avoid making impulsive decisions based on short-term price movements. By focusing on the long-term trajectory of Bitcoin, investors can capitalize on the opportunities presented by the cryptocurrency's growing adoption and expanding use cases. Bitcoin's status as a decentralized digital currency and store of value has garnered increasing interest from institutional investors, corporations, and retail users alike, driving demand and adoption across diverse sectors. The executive highlights that Bitcoin's scarcity, immutable ledger, and resistance to censorship make it a compelling hedge against inflation and economic uncertainty. As central banks around the world continue to pursue expansionary monetary policies and governments grapple with unprecedented levels of debt, Bitcoin's appeal as a non-sovereign, deflationary asset is likely to grow, further fueling its long-term appreciation potential. Ultimately, the executive's argument underscores the resilience of Bitcoin as an asset class and its remarkable ability to withstand market volatility and uncertainty. By recognizing the natural ebb and flow of market cycles, investors can gain valuable insights into the underlying dynamics of the Bitcoin market and develop strategies to navigate its ups and downs effectively. Bitcoin's resilience stems from its unique characteristics, including its decentralized nature, limited supply, and growing adoption as a store of value. These qualities provide a solid foundation for Bitcoin to weather short-term fluctuations and emerge stronger over time. By understanding the cyclical nature of market cycles, investors can avoid succumbing to short-term panic or euphoria and instead maintain a long-term perspective on their investments. Rather than being swayed by temporary price movements, investors can focus on the fundamental drivers of Bitcoin's value and its potential for long-term growth and adoption. In conclusion, the claim that Bitcoin price is going down is a flawed notion is certainly provocative, but it's not without its critics. While Bitcoin may have unique qualities that differentiate it from traditional assets, it is still subject to market forces and external pressures that can impact its price. That's all for today.